Welcome back. Yet more signs of crypto going mainstream. Goldman and Bank of New York Mellon announcing today they are teaming up for a tokenized money product that could potentially transform the $7 trillion money market industry. This is interesting because stablecoins are kind of like money market. Anyway, joining us for more, CNBC banking reporter Hugh, who broke this story. Hugh, so tell us about it.
Great to be with you, Kelly. Yeah, so lots of excitement over stablecoins because of what just passed last week, the Genius Act. And so notably, Citigroup, Bank of America, JP Morgan talking about issuing their own stablecoin. But what stablecoins can't do, and they don't do, is actually offer a yield. So part of the solution, and that BNY and Goldman Sachs, the reason why they're so excited about this innovation is that, if they have a future in which all these assets reside in the blockchain, they're going to be institutional players. Now, we're talking about hedge funds, we're talking about pensions, we're talking about, about corporate treasurers who are going to want to have a yield. And so it's essentially taking the money market, industry, which is $7.1 trillion, bringing it to the blockchain and making it transferable in a way.
So help me understand this. How is this then different than a dollar, cash,
money,
or a short-term treasury bill, T-bill?
Yeah.
What is this? Why do we need this?
Okay.
I know I'm dense. I'm struggling.
No, it's good to talk about, Ryan. So there is the idea, and it's not supported by everybody, that essentially you're going to have a stable coin with a yield as a result of this. And actually, some people are proponents of that. They think that's a good thing.
But how are they getting a yield? They're buying T-bills.
Well, it's just a money market. You've got money markets when you're in,
So the yield's going to be like 1 cent, infinitesimal, effectively.
I'm getting close to 3.8, 4%. Yeah, if you go for a money market with a high yield, you can do that. Yeah, and so there is a decent yield on this. Corporate treasurers would want to put their cash, instead of having it 0%, actually earning a yield close to 3-4%. That's the reason why they would want to do it. And so this is taking this asset, which is well trusted. It's gained maybe $2 trillion in the last 2 or 3 years, the rate hiking cycle, and turning it into a token. Why would you want that? You might ask. I mean, ultimately, the thinking is from these guys is that if a cash management situation, they actually want to raise funds. They want to sell this the money market fund. Instead of doing that, they're just going to exchange a token. In other words, you've cut a couple of the steps out of this process, Brian.